Every trader enters the market hoping to win, but every profitable trader stays in the market because they learned how to lose. That may sound strange, but it's the truth most beginners don't want to hear. Losses are not a problem in Forex. Refusing to accept them is. The moment you stop fighting losses is the moment your trading begins to change. The hidden truth about losses: most new traders believe losses mean failure. They see a red trade as proof they are bad at trading. They take it personally. They try to recover it immediately. They increase lot sizes. They jump into random setups. This emotional reaction is what destroys accounts. Professional traders see losses differently. They see them as operating costs, just like rent in a business, just like fuel in transportation, just like inventory in retail. Losses are simply part of participating in the market. Once you understand this, everything shifts. The market is not against you. Many traders act as if the market is trying to hurt them. They say things like, "The market hunted my stop. Price waited for me to enter." Forex is manipulated. But the market doesn't know you exist. It doesn't care about your account. It moves based on global money flow. When you accept this, you stop taking losses personally. You stop trying to fight price. You start respecting probability. Accepting losses removes fear. Fear comes from trying to avoid losses. When you desperately want every trade to win, you hesitate on entries, move stop losses, close early, or avoid good setups. But when you accept that losses are inevitable, fear loses its power. You enter trades calmly. You let stops sit where they belong. You allow trades to breathe. Your execution improves because your emotions are quieter. Acceptance creates freedom. It stops revenge trading. Revenge trading is one of the fastest ways to blow an account. It happens when a trader feels wronged by a loss and tries to get it back. They abandon their plan. They increase risk. They chase entries, all because they couldn't emotionally accept a small loss. When losses are accepted as normal, there is nothing to revenge. You simply log the trade and wait for the next opportunity. This single change can save years of struggle. Accepting losses protects your capital. Disciplined traders predefine risk before entering a trade. They already know how much they can lose. So when price hits stop loss, there is no shock, no panic, no impulsive decision. Capital is protected because the loss was planned. Undisciplined traders hope not to lose. Disciplined traders prepare to lose. That preparation is what keeps them in the game. Consistency comes from emotional stability. You cannot be consistent while emotionally unstable. If one loss ruins your mood and one win inflates your ego, your trading will always swing wildly. But when losses are accepted, emotions flatten. Wins don't excite you too much. Losses don't depress you too much. You stay centered. That emotional balance leads to consistent execution. And consistent execution leads to consistent results. Losses teach you more than wins. Winning trades feel good. But losing trades teach you. They show you where your strategy needs adjustment. They reveal emotional weaknesses. They expose bad habits. Every loss contains information. But only traders who accept losses are willing to study them. Others avoid reviewing because it hurts their ego. Growth begins where ego ends. Accepting losses builds professional thinking. Professional traders don't aim to be right. They aim to be profitable over time. They think in probabilities. They understand that even great setups fail sometimes. They focus on expectancy, not individual trades. This mindset only develops when losses are fully accepted. You stop asking, "Will this trade win?" and start asking, "Does this trade fit my edge?" That shift changes everything. The turning point every trader must reach. At some point, every serious trader has a moment of realization. I don't need to avoid losses. I need to manage them. That's the turning point.